It was a time like no other. A time when human vision changed focus. And the world was viewed from new perspectives. From out of the dark ages came enlightenment. It was a time like no other. From out of the darkness, light. Vision changed focus. Dimension. And the world was viewed from new perspectives. Invention. From out of the dark ages. It was a time when the writer lent words to the scientist. Out of the darkness, light. The mathematician gave proportion to the artist. Dimension. It was the Renaissance. The rebirth. A time when science fueled art. Art launched the imagination. And behind it all were the Renaissance. Many well known. Others unsung heroes who still touch our lives more than 500 years later. Unsung heroes like Luca Pacioli. Don't know who he is, but all of us depend on what he's given us. He's the father of accounting as we know it. The unsung hero of the Renaissance. And this is his story. Understand who Luca Pacioli is. Understand where he came from. Here, where his life began over 500 years ago. In the Italian province of Tuscany. In the small, quiet town of San Sepolcro. Today, there are adding machines in San Sepolcro. Fax machines. Computers. But back in 1445, when Luca Bartolomeo Pacioli was born here, Accounting was neither an art nor a science, but Pacioli's destiny was to make it both. As a child, Luca Pacioli played on these same cobblestone streets that we walk on today. Perhaps right here, where this plaque now honors him. Back in 1445, his family was poor. Accounting was neither an art nor a science. His future predictably unpromising. Until the boy grew into a young man, determined to redirect his life. Little did he know, did anyone know, that this young man would one day alter the course of global economic history.
The cultural renaissance of Luca Pacioli's time was fueled by an economic renaissance. Business was booming, and this allowed the arts to flourish. We saw this and realized that if you were to be taken beyond Renaissance Italy, that the mechanisms of commerce had to be put to paper. Taken to Europe, taken to the rest of the world. This was Luca Pacioli's contribution. Luca Pacioli was an important figure in the Renaissance, and his life and work underlines the essential interrelationship between art, business, and science of his time.
Okay.
Without this relationship, the Renaissance could not have taken place. The success of the personal computer industry and Microsoft is based on the spreadsheet. And the spreadsheet is a direct evolution of the double entry system published by Luca Pacioli.
At the time of Pacioli's youth, it was uncommon for anyone but the wealthy or the noble to continue their education beyond the age of 16. So Pacioli did what was expected of him, but not for long. In the Franciscan monastery in San Sepolcro, he took his religious and mercantile training from the friars. Then he was apprenticed to a local businessman, as most young men were. And that's when Pacioli decided to take a different path. One that brought him closer to the subject he loved, mathematics.
I have been interested in the science and theology of mathematics for as long as I can remember.
It was this interest that led Pacioli to abandon his apprenticeship and take a bold step in a new direction, a step that would change his life and work forever. Pacioli was invited to study with the renowned early Renaissance painter Piero della Francesca, right here in San Sepolcro. Piero was
I'm excited.
I think it's gonna be the first.
Okay, good evening, guys.
But I think I'll still go.
Evening.
And I said I can bring one back for you.
Good
Yeah,
evening.
I don't think it's.
Good evening.
Yeah, no, I don't think it's not a practical part,
Hello.
right?
Oh, I thought he said that.
Yeah. Is it? I think I'll still go test that like after I bring up. You should buy a Mustang. But yeah, I know, but I don't think it's a private car. I said, why would you even worry about practicality? We got so many. We have like literally four or five different cars. You see how many cars we have?
Yeah.
And I said and I said your car is basically
Okay, guys. I guess you're talking. Let me see. Well, we have 54 people there. I guess I'm going to log the meeting. Don't want anybody to. I don't know if anybody's coming in. Maybe give a couple of minutes. I guess today we'll start chapter 1. But before that, oops, let me go to where is, okay, right here. This video for you. Skip. Share screen. Whiteboard finder. How do I share this? 753 Zoom. Not that. Share screen. What is the desktop? No, basic. Whiteboard. I don't need a whiteboard. Okay. What is that one?
5 years older than Pacioli, yet he saw great promise in the boy. And Pacioli saw his mentor as one who could unlock doors of knowledge and experience that might otherwise stay closed to him.
To get on in life, make your friends among older persons, for only they are in value of placing you among people of consequence.
Piero della Francesca was a Latin scholar, a poet, and a cosmographer. He wrote books on perspective and
Guys, can you see the video? No. Can you hear this video? Raise your hand. Hello?
I don't see anything.
No? Okay, why is it not sharing the screen? Let me see. Again, live on tube, recording pause. Okay, share. Why this is a finder? Finder, what is finder? This finder, business, 21 finder. Okay, share. That's not what I'm trying to share though. Can you hear the video?
I can hear it.
Yes.
Yeah.
You can see the video, the cookies?
We can't see the video, but we can hear it.
Yeah.
Oh, you can't see it?
Yeah, we can't see it, but we can hear it.
No. If you can't see it, it's no good. And so, I don't know what is wrong with the new share. Okay, new share. Finder, not whiteboard. What is it, desktop? Screen share for video clip. Basic, I don't see the desktop here. Finder. Advanced voice. No desktop here. Okay. Stop share for the time being. Let's see. Share again. Share screen. It's going to whiteboard. Share screen reactions. And meeting participants. Anybody voting there? Admit. Okay. Doing share screen, multiple participants in some, one participant in certain advanced sharing options.
I think it would be better if you gave us the YouTube link and then we could watch it like
Only
after class.
host. No, it was not the YouTube thing. It was a video that I have on my computer. It's a dual monitor. Who can share? Only host. That's fine. Only host. But I used to see a desktop here. Where did my desktop go? I can't figure that out. Generally, I could share the desktop and whatever is my desktop, you could see. Why there are so many finders, but no. Turn from second camera. I don't have a second camera here. That's fine. Okay, I guess if you can't admit, somebody went out. Polling share screen. Basic Zoom meeting. Share what? Oh, this is just the thing. Share screen. So many finder. What is the finder? So many. Let me clean up the 153 YouTube. There. Finder. Can you see the video now?
No, we can't see the video.
No.
You can't, okay. I guess there's no way I can figure it out now. Let's forget it. We'll move on. Okay, let's just 54. Winter, spring, tune. Okay, let's go on. Okay, share screen. Just don't understand why there are so many finders here. Share. Finder share. Okay, let's see. And as participants, somebody came in. No, that's I admit. Business 21. Can you see my screen now? Yes.
It's just blank.
What can you see now?
It says Barry Mishra has started screen sharing, but just a text.
Huh. New share. Oh, okay, maybe in the new share I'm getting this. Let's see. Sharing is paused. Bring your screen to the front. New share. Sharing is paused. Bring your screen to the front. Okay, so I'll get this one goes out. Right, so why today is not sharing? Resume share. Sharing is paused. Bring your screen to the front. Can you see my screen now? Hello?
No.
No.
No. Oh, no. This is ridiculous.
Earlier today,
Mhm.
when you started the Zoom, we were able to see your screen.
Yeah, I don't
Oh,
understand.
there we go. We can see it now.
You can?
Yeah.
It's back on.
But not this screen. I want you to see this screen. Can you see this one? The
No,
PowerPoint?
we just see the files.
No, that's not the one. Stop. Okay. And meeting one participant, multiple participants, polling stuff, share screen. Let me see. Maybe this one will work now. Does this work?
Yeah, we can see the
Yeah,
lecture now.
Okay, great. Oh my God. Yeah, you spend so much time on this, not worth it. Okay, great. So, well, I wanted to show you a video that I have, but I somehow can't figure it out. I mean, this is always a problem, but today we'll be talking about the very beginning of what are our learning objectives for chapter 1. Well, first we want to understand that accounting does not exist in vacuum. What it means is that we do accounting for a business or an institution, whatever, is that right? An institution is like UCR. Of course, there are businesses, there are profit businesses, non-profit businesses, all kinds of businesses. But we do accounting for businesses, not. So let's suppose you have a great idea. And what happened? I think before this, there was another one, okay. And you want to kind of, start. I mean, how do you implement a great idea? I mean, you have to start a company or something, is that right? So when you want to start your business, you have to first organize your business. That means you have to set up some form, and most of the businesses in the US are set up as what is called sole proprietorship. That is one guy who, oh here, that's the one in the back. One guy who owns the company. Now, obviously, you also have heard of partnerships where more than one people come together to start a business, right? And there are corporations. Obviously, we hear about them every day, all the day in the stock market. There are private corporations, there are public corporations. Now, public corporations are the ones which are traded in the stock market. Private corporations are not traded in the stock market. You cannot buy their stock just going to a brokerage company. Like you can buy the public, like for example, Apple. Any one of you want to buy Apple shares, you can. But have you guys heard of a company called In and Out? Any questions? You can unmute yourself and ask questions, okay? Feel free to stop me. I mean, ask questions. So have you guys heard of a company called In and Out? I mean, have you guys seen the In and Outs?
Hello.
Okay, so a lot of you raised hands. I can see that you have been to In and Out. I mean, let me tell you a small story here. So my son was visiting me, and and he was going to UCL at the time, and now he works for Intel. So he was home, so we wanted to go out for lunch, and I said, okay, let's go out for lunch, and so we'll go wherever you want. And he was driving, and he took me to In and Out. I looked at the place, and I said, what? You understand that I'm paying for it? Why are you taking and going here? And so he said, no, the food here is good. So, well, we tried it out, and this thing was, what did this place look like? As small place, you go through this thing. But once I got the food and took a bite, wow, the taste was fabulous. I said, how come I don't know about this and it tastes so good? So guess what? The first thing that I do when I come back home is to kind of want to buy shares of In and Out. I liked it so much, but then I realized that In and Out shares are not available. It's a private company. So private companies, you cannot buy the shares. It's not trading in the open market, whereas Apple, IBM, all those things, you can buy it. So those are corporations. Now, the difference between the sole proprietorship, partnership, and corporations are that the first two, sole proprietorship and partnerships, they have what is called unlimited liability. That means whatever you owe to somebody else, you are responsible for it, and they can take all your things from you. Any debt that you have, they can attach your property and stuff like that. Whereas in corporations, you have limited liability. Suppose you buy a share of Apple today, whatever it's selling for, you can't ever lose more than that amount. I mean, at most, Apple share can go to zero. Of course, on the offside, it can go anywhere. Limited liabilities companies are innovation that is more recent, and they kind of give you the limited liabilities of the corporations and do not have the same problems as sole proprietorship or partnership. So here also you have a limited liability, and that's a great thing because if the business fails, they can only attach the business assets, not your personal assets, and that's important. Okay, so these are definitions for sole proprietorship. As you can see, the owner is personally liable for all debt of business. For if it's a partnership, each partner is jointly as well as personally liable for all the debt of the business, whereas corporations, you have limited liability. And corporation form was a great invention, which has done many wonders in this world. The first corporation was basically set up in UK to develop their railroad. And later they were set up everywhere else. So what about businesses today that's different than businesses in the earlier years? Now think about, well, here's the Apple company, and there are, you can see owners, creditors, and employees. Now Apple, how can you be an owner? Anybody? You can unmute your mic and say.
Buy shares.
Buy shares, that's right. If you buy shares of any publicly traded company, you become an owner. Now, how can you become a creditor of the company? Well, you can buy bonds. The company not only sells shares, the things that you don't hear about in the bond market. In the bond market is actually 10 times bigger than the share market. Every day we hear about what happened in Dow, S&P 500, and all those things. We don't hear what happens in the bond market. But bond market is much, much bigger than the stock market. And the bond market actually things doesn't move that much, but recently they have started moving really fast during this COVID-19 virus thing. In fact, I mean, I guess it's difficult for you to understand that right now, but the liquidity in the treasury market has dried off, and that's what basically the Trump's Treasury Secretary Mnuchin and the Federal Reserve, they're trying to do that. They inject liquidity into the market. Now, of course, employees are people who work for these companies, right? The CEO, CFO, the managers, whoever works for the company, starting from the assembly line to the executive ladder, all of them are employees of the company. So a person can be all three of them. He can be an employee of the company, can be owner of the company by buying shares, and can be creditor of the company by buying bonds. So the difference between these companies and the sole proprietorship that we talked about is that the owner is one person there. Here, owners are all over. Apple, you can buy one share of Apple and you are 1 billionth owner of Apple. Now, who manages Apple? If you ask the question, you don't manage the Apple, even if you own the shares, right? The owners don't get to manage the company. The company is managed by the employees or managers and workers who are working for the company, like the CEO, CFO. Now, how does that work? Well, the owners generally have a voting right by which they can vote. They vote for a board of directors. The board of directors basically can hire and fire the CEO and CFO. And obviously the CEO, CFO, and the top executives, they can hire the managers below them and all those things. That's how it works. Now, the question is, the owners and the managers are not the same people. And so their incentives are very different. I mean, what does a manager want? I mean, somebody who's working for a company, well, they want to maximize their wealth. their benefits. They're not worried about owners, and that's why you see a lot of times there are fraud and stuff like that. Now, that should not happen in a good company. There are mechanisms that are put in so that they don't get to do whatever they feel like, and there are rules and regulations. But nonetheless, you have heard of frauds, and you will see as you go through this. I'm hoping that I can show you the videos that I have. Today, I couldn't show you the video that I have. I have to figure that out, how to do that next time, because there are several videos in this class that are very informative and I need to show you guys. So yes, whereas if you look at a pop and mom store, who owns the company? The pop and mom, they're the owners. They don't have any incentive to lie to themselves, right? They are running the business. They are the residual owner of the business. So everything that stays with the business, if the business prospers, they prosper. Whereas the CEO, CFOs, or the managers, they have their incentives which are different. They want to make more money or get more perks. They're not worried about the owners. Owners are basically the stockholders. And so there are some problems, and to a good extent, to alleviate some of these problems and let these owners and creditors basically employ their funds, because it's a big deal that no matter how great an idea you have, you can't do anything unless you can raise money. And that raising money is called capital formulation. And that capital formulation is based on what information is available in the market and how efficient that information is. So that is where the financial accounting comes in. It's concerned mainly with providing information to the persons outside of the firms who are the owners and creditors, who then invest in the company. And that money is used to run the company. And obviously, if you run the company profitably, then you have more money coming in that you can plow into the company. So as you can see, still 72% of the US corporations are sole proprietorship. That is one person who started a business. And as a matter of fact, most of the new jobs comes from these small businesses. It doesn't come from S&P 500 companies. So what do then accounting do in the business? Well, the accounting system is there. Businesses, of course, will do their business activities, including financing activities and operating activities and all other kinds of activities. So the accounting system captures these activities, then it records it, summarizes it, synthesizes it, and reports it to these outside shareholders and creditors. Now that part is done by the financial accounting. That's what we'll be studying here mostly. There is another thing that is there, where what is called the managerial accounting. That's done for the internal users or the companies, how the company runs. So the managers in the company have to make decisions to run the company. For example, we have to make decisions as to what to do. Like this is a decision that was made by the UCR as well as the UCOP, that during this COVID-19, we are going to do this thing online, right? So how to run your business? What are the pros and cons? What can be done, can't be done? How much money to invest where? I mean, those things are kind of done by the company managers, and they need different kind of information. They're internal users. And that's what you learn in managerial accounting. But right now, what you're looking at is financial accounting, which is for external users. And external users basically means two groups of people. The people who gives you debt, creditors, and people who own the company, the shareholders. Any questions so far? You can, again, as I said, unmute your mic and ask questions. I think we have 54 people. I don't see anybody waiting on the line. I'm going to the video participant 64 screen. Oh, what happened? I should be able to lock it. Why isn't that's happening?
Professor, I actually have a question about a corporation.
Sure, go ahead.
So is there actually a way for corporations to, like the people who work it, to get unlimited liability as well? Like where, you know how like if they get sued?
No, no. It's the unlimited liability is with respect to their business ownership. So if a CEO of a company does criminal activities or something, he can get sued. I mean, that's different, is that right? And if he gets sued on the company, this thing, then the company will take care of it.
All right, sounds good.
That's the liability of the company, is that right? If you can sue the, the company executives, then the company has to pay for that, not the executive. And if he made a decision on the business, this thing, unless like he's trying to do something, that is illegal. If you do illegal criminal activities, you are not, then basically, you have all kinds of liabilities. You are not protected. The company cannot protect you. Okay?
Yep.
Okay. So here is a comparison between the two types of accounting that I talked about, managerial accounting and financial accounting. As you can see, the users of the financial accounting are external, or it could be internal. Internal means the managers, they can also use it, but not as much, because all the financial accounting informations are past information about the company. The managers, they need future. For example, think about UCR. How do we plan about next year for the UCR? It starts with enrollment management. How many students we are going to expect, in what areas, what division, in engineering, in business. So, it kind of goes down. So, okay, these many engineering students in graduate program, undergraduate program, PhD program. So accordingly, the resources has to be assigned. But that's based on the future estimates. So those are managerial decisions. So they relate to planning and control. Whereas the financial accounting decisions are mostly basically about what has the company done in the last quarter, last month, last year. And it's for stewardship and investment. The focus is stewardship and investment, that how should the company manage itself going forward? If it's not making money, if there are lines of businesses that the company should get in, get out, whatever things, how should the business be run at the top level? That kind of the financial accounting information gives you those kind of things. For example, a lot of companies will now have to worry about how they are going to run in future, right? And even now, as when the COVID thing came in, the fast food companies are not affected much, right? They are affected, but not as much, because they have a drive-through already set up and they know how to run that business. But normal sit-down restaurants, they have a problem, right? They don't know how to run that business well, or even people will come to them or not, because again, but obviously if allowed, some of them will probably go into that. Timing for the financial accounting is past and generally for a long period of time, but managerial accounting, can be past, future, it can be long or short. We want to know tomorrow, like how many for a business, like the retail outlet, they might even need to know how many people they want to have tomorrow, or who will be working for tomorrow. So those kind of things. So it could be very short future. The other important thing about financial accounting that we'll be doing legal influence, because it is regulated. You cannot do what you feel like. Whereas managerial accounting is unregulated. There's no regulation which tells you what information you can collect, how much money you want to pay to get that information, or whatever. So in that case, basically in managerial accounting, the only thing that determines where you want to stop is you don't want to pay more than what you can probably make by getting those information. So that's where you'll stop. The marginal cost is equal to the marginal benefit. The expected marginal cost is equal to the expected marginal benefit. Okay, I think, what is it? I forgot to record. Screen sharing has stopped. The shared window is closed. Okay. Huh? My shared window is closed. Recording. That's fine. I can share it back. The other thing is scope. Basically, financial accounting is mostly objective and verifiable, whereas managerial accounting can be non-financial. You can measure things like customer satisfaction, cycle time, stuff like that. Whereas here, everything kind of is measured in terms of dollars and cents in the financial accounting side. The reporting unit is basically the whole business or can be a segment of the business. Whereas in managerial accounting, as you will see later, it could be anything, division, plant, product, all kinds of stuff. You can look at any level that you want to look at. So what is then important for the external financial reporting? The main goal is to provide useful information, financial information to the external users. Here, the external users are basically two kinds of people who provide capital to the company. One is the owners who buy the stock, and the other one is the creditors who give loans. It could be banks, it could be bond holders. So they need they need information that is useful to them to make decisions, make the decision to invest money in these companies, right? And what those useful informations are, first thing is that they must be relevant. If the information is not relevant, then it's not useful. And second, they should faithfully represent what they say they are representing. The way to think of relevance is like this. I mean, I'm kind of a little dramatizing it. Let's suppose you go to your doctor and you tell him your grade point average, what classes you are taking, how great a student you are, and all those things. Are those information relevant to him? No. I mean, what is he going to do with that? He needs to know your temperature, blood pressure, whatever things, or where is it hurting or what you are having, so that he can prescribe you medicine, right? So for his decision making about your health, how great a student you are, what grade point average you have, and what classes you have taken is of no value. It's not relevant or irrelevant. However, the same information is quite relevant when you apply for admission to another school. What classes you took, what is your grade point average, how did you do? And there, if you are applying and you give your blood pressure and your temperature and all those things, and then, of course you don't, but what I'm saying is that that's irrelevant for those guys to make a decision. So the information by itself is not relevant or irrelevant. It depends on the user. So our users, of course, the information has to be relevant to them. And that's what we try to produce in the financial statements. So it's called, the other thing is faithful representation, which basically means that if you give some information, that information should represent what it is. Think about your car's odometer. It gives you how fast you are going. Let's suppose it says it's going at 40 miles, but you are going at 100 miles. Well, that's not faithful representation, is that right? You don't know, you're going at 100 miles, the police stops you and gives you a ticket, but your car odometer is showing you're going at 40 miles. So no, that's kind of not a faithful representation. So you want to have faithful or accurate representation of what information you're given. That secondary quality of information that is important also, so that the information should be comparable from period to period. If possible, it's verifiable. That means two independent persons looking at the same information, they come up with the same judgment. It should be timely. If the information is not open timely, then you can't make decision on that. And for the people who are making this decision, it should be understandable. If they don't understand, they can't use it. For example, I mean, somebody gives me a financial statement in Chinese. I mean, it's perfectly fine for the company, but I don't understand because I don't understand Chinese, right? So it's useless to me. Same thing. Now, there are many different accounting standards. As we said, the accounting is regulated. And so where are these accounting standards? Well, in the USA, it is the Financial Accounting Standard Board. It's an independent authority. And it's called Generally Accepted Accounting Principles. That's what is used. Again, you have to understand that for financial accounting, it's regulated. There are standards. In the world, you have what is called IASB, International Accounting Standard Board. And then you have International Financial Reporting System. There are about 130 or 140 countries which follow the IFRS. In USA, we follow GAAP. Both of them are now very similar, but they have not merged with each other. That was the original plan, but I don't think it's going to happen. And the reason for that is there is no incentive for either of those companies to do that. And it's kind of was initially to be done in 2014, then 2018, now we're 2020, but they're not the same. There are still differences between GAAP and IFRS, but basically, in most cases, they have kind of come together. Now, I'm sure in every other business class that you take, they will say, you should be creative, you need to think out of the box and all those things, right? Marketing, but in accounting, we tell you that you should not be creative. Always follow, especially in financial accounting, follow the rules. If you don't, you might end up in jail, okay? So the basic accounting equation, this is what this Louis Pacquioli guy invented. Assets is equal to liabilities plus stockholders' equity. This is what is called double entry accounting. The assets are the resource owned by the company. Liabilities are the funds provided by the creditors, and resources owed to the stockholders, that's provided by the stockholders' equity. Now, the double entry accounting is used no matter whether you use IFRS or whether you use GAAP or whatever accounting system you use. Most companies, not most companies, all companies use double entry accounting today. And double entry accounting was invented by Luca Pacquioli, who is the father of accounting. So I have given you a video. Please watch the video because that gives you the history of accounting. And it is important that in 500 years since then, nothing has changed. Double entry accounting is still double entry accounting. And we still use this equation, assets is equal to liabilities plus stockholders' equity. This is the Bible of accountants. So like law of gravity, there are no laws in accounting except this particular equation. This is has to be true all the time. One of the things that's important is that separate entity assumption, which basically means that the activity that the owners do has got nothing to do with the activity of the business. So if you own a share of Apple stock, no matter what you do, Apple is not affected, right? And your activities are your activities, has got nothing to do with Apple. So what are some of the financial statements that we have? Well, generally, if you're doing the financial statements by manually, then you will start with the income statement. Then from there, you go to statement of retained earnings or statement of stockholders' equity, then the balance sheet, and finally the statement of cash flows. So these financial statements are manually, when you prepare them, you prepare in this order, and they're all related. Let's look at some of them. Here is a company called Pizza Aroma Inc. Now see that your book talks about a software company. I am going to use this Pizza Aroma Inc. because I want to give you a different perspective than what your book has. How does this work in a, in case of a company that produces some product like pizza? But the basics are still the same. Besides, there are a little bit of differences. So as you can see, an income statement of the Pizza Aroma Inc. for the month ended September 30, 2010. That means this is for the duration of the whole month of September. Their revenues are 11,000. They have several expenses, and this is called simple income statement. So revenues minus expenses gives you the income. So reports the amount of revenues less expenses for a period of time. And if you have income, that means that's good. The more you have, the better. If you may not have income, you may have loss, and that's not that good. You can't keep on making loss forever. Now, most startups do make loss for a while, but at some point you have to start making money. Otherwise, you will not be in the business for long. Okay. Again, these are reported in dollar in US. They might be reported in yuan in China, in euro in Europe, in yen in Japan. So you basically use the monetary unit that is true for that particular country. Here is a Pizza Aroma Inc. statement of retained earnings for the month ended September 30. As you can see, the September 1st, the business started, so they do not have anything in the retained earnings column. Then you add the net income, $2,000, and they give out dividends, $1,000. So retained earnings, September 30, 2010, what remains is $1,000. So report the way that the net income and the distribution of dividends affects the financial position of the company during a period. Now, a lot of companies, when they're starting out, they don't give dividends. Here, of course, Pizza Aroma Inc., they give dividends. This is the balance sheet. the balance sheet is basically like a net worth of a portion. Oops. Okay, let me put here. So as you can see, this is the equation that you have seen there. Assets is equal to liabilities plus stockholders' equity, except that now it's written in a top-down order. So we have the heading Pizarma Inc. balance sheet. The balance sheet at September 30, 2010, that means it is at a point of time. This is a snapshot, like somebody takes your photo. You are frozen at that point in time. So this balance sheet is true for this point of time, only on September 30. September 29, it will be different. September 31st, it will be different. So reports at this point, this particular day, what the business owns, which is called the assets, what it owes to its creditors are called the liabilities. And what is left over for the owners of the company after you pay up the creditors, that is called the stockholders' equity or the book value of the company. Okay, so as you can see, the total assets always has to be equal to total liabilities plus stockholders' equity. So that's the basic equation, assets equal to liabilities plus stockholders' equity. That's the only law that you have that's true in accounting all the time, double entry accounting all the time. What happened? And here is, oops, the top, a statement of cash flow, which basically says where are you getting your cash flows from and where are you using them. So you can have cash flows from operating activities. So the cash collected from customers will come in, you're using to pay suppliers and employees, that those are operating activities. Then those are the cash provided by operating activities, cash flow from investing activities. You buy equipments, you use money to invest in other companies or whatever. Cash flow from financing activity. The financing activities are basically threefold. One is if you raise money from stockholders, or you borrow money from somebody, or you pay dividends, or you buy the stock of the company. So those are, oops, working, okay. So summarizes how business operating, investing, and financing activities. Now the cash flow is important because net income itself is not something you can pay somebody with. You might have tremendous amount of net income, but revenues and expenses are accounting concepts. You cannot pay somebody by net income, you have to pay them cash. So that's why your cash flows are very important. And if you don't have proper cash flow to pay off your expenses and all that, you can go bankrupt. Ethical conduct. Well, as accountants, we are professionals and we are supposed to behave ethically all the time. As a matter of fact, you guys have heard about Enron? What happened to Enron? The company went bankrupt. It was a total out and out fraud. And the auditors actually were sleeping with the management, the CEOs, the chairman, and they were committing this fraud. The company was actually the 7th largest company in the US in the S&P 500 one time. But it was actually a empty or hollowed inside. There was nothing in the company. So the company went bankrupt, but before the company went bankrupt, the person who actually did a whistleblowing was a CPA, and she was a woman CPA. She went to the chairman or the CEO and said that something doesn't look right. Guess what? What happens to her?
She got fired.
He got fired. That's what it is. I mean, so to be ethical, is not always cost-free, because if it were, there were no cost to you to be ethical, then everybody will be ethical. I think it is Warren Buffett who said, honesty is an expensive gift. Don't expect it from cheap people. So that's the issue. Ethical dilemma is either you are going to be hurt or somebody else is going to be hurt. There is a cost to being ethical, and that's why you have to figure out how to deal with a situation. So whether you will be harmed, whether others will be harmed, what are the alternative actions? But no matter what, as a professional, you have to be ethical. So choose the alternative that is the most ethical. Now, if it's illegal, you don't have a choice. The moral and ethical things are kind of, they are a gray shade, and it depends on people, depends on culture. Now, in a lot of cultures, I mean, piracy of software is not considered a big deal. In US, of course, you can go to jail for that if they find out and all those stuff. And people in general have a, I mean, again, your ethical values are mostly from your cultural and other social values. Your social values have a lot to say about your ethical values. What you will do or not do depends on those things. I mean, there is a saying that, don't do something that if it's published tomorrow in the newspaper, your mom will feel bad about you, or will be, what do they call it? I mean, she will be put in shame. I mean, that's a standard some people talk about. But again, it is very individual, because it's not ethical and moral things are not illegal things, and people cut corners all the time. But as a professional, you should keep that in mind and do the right thing. Here is how people are, the jobs in the accounting area. Your private accounting and public accounting. Well, public accounting is basically the CPA firms. All the CPA firms, including the big four, Deloitte, Touche, Ernst & Young, KPMG, PricewaterhouseCoopers, and there's a lot of regional firms. These days, BDO, Sidman, and all those things, RMS, McGlady, these regional firms have become much, much bigger. And here you go for auditing, taxation, consulting, forensic, and all those kind of stuff. Generally these days, I guess, I don't know how much they will pay next year, but these days, I mean, they were paying, like in LA area, about 70 to 75,000 starting salary. You could be a senior accountant, a manager, partner. This is a pyramid system. Very few people go to the top. The type of organization, the private is public company, is basically the company like Apple. All businesses are kind of the private accounting. You can work for them too. Now, before, the partner's job used to be a big thing, like you are a partner of big four, or then you used to get paid a lot of money and all those things. But these days, actually, if you work for the private sector, let's say the CFO of Apple, I mean, she makes millions. So these days, you can actually work for either Wall Street companies or our Northern California startups or technology companies, and you can make a lot more money than you could make as a partner in a big four accounting firm. So here you basically do general accounting, budgeting, cost accounting, all these things that are for planning, mostly for internal decision making of the company. Here you are basically, looking the CPA firms, they basically audit and audit the financial statements of other companies, or do provide tax consulting and stuff like that. Now here, the starting salary might be a little low, but depends. Most people actually try to work for this public accounting firms for a couple of years before they switch on to the private accounting, because that way you actually do better. So as you can become the chief financial officer, controller, treasurer, director of accounting, and in top companies, these positions these days pays a lot more than a partner in a big four accounting. You can look at the salary guide, www.collegegrad.com, careers. So again, this is the stuff that we talked about. Let me see if I can show you some video that I have. I hope I can. Okay, do you want to say the changes made to the criminal? What changes I made? I don't even know. Don't say. Okay, that's fine. To everyone in waiting room. Are there anybody in the waiting room? I don't see anybody. Okay. Close here. If I share screen, I go there. I'm sharing that screen now. If I, let's say, I can start this thing, cookies. How do I share this screen? Not this screen, stop share. Okay, let me try something else. You cannot minimize Zoom when you are recording this meeting. Okay, I don't want to minimize. Oh. No. Exit full screen. Make Zoom what it is. Get this one. Share screen. Optimize screen share for video clip share. Okay, new share. I figured it out. Let's see. Can you guys see it now?
I see it.
Yeah.
Okay, how do I play it? Escape. Oops, escaped. Okay, can you see it now?
No, we can't see the video.
Can't, huh? So when it's coming as video, you can't see it. Okay. Escape. Okay, I thought I figured it out. Okay, share. Let me start this again. What is going on? Why is it closing it? Share. Gosh. Error reporting, what happened? Pause it. Come on.
Professor, I have a question.
Yeah. Go ahead.
Is the assignment gonna be posted or we
What
sup-
assignment?
There's an assignment that's due at 8 p.m. today.
The in class?
Yeah, it says during lecture class you will be given some tasks to do, and it's due
Yeah,
by.
we haven't done that yet. So, depending upon which lecture we do it or don't do it.
Got it. Thank you.
Pause. No, there was a problem. Microsoft for more information. Why is it doing this? Close. I think I got it once. Close. Then I can't get it. This is stupid. YouTube. What is it? Screen. Share screen. Okay, maybe we can share this. Okay. Okay. Now I start it. What's wrong? No. Can you see the screen?
We see it.
Hello?
Yeah, I see it.
Okay, I guess we'll just go somewhere. It's not going to run as a video, so I'll just go over this like this. You can see the first picture, is that right?
Yeah.
The young lady, right?
Yeah, yeah. Then the next one is coming. It will basically just going as a PowerPoint, and there's no. And there was a nice music with it, but obviously we can't get it. I guess you just missed the music. That's okay.
Wait, but it was her cookies, right? Just her cookies.
What is that?
Was it just her cookies? Like she was the one owning the cookies, right? And
Don't
then-
ask questions, just watch. We'll talk about it then. You missed it, I guess. Okay, let's stop sharing that one. Let's come back. Okay. What do you think? What is about accounting there? Anybody?
Any transaction made is permanent.
You don't have to, I mean, the bottom line is there is really nothing to do with accounting, but there's a lot of common sense to be there. One is information or assumptions that you are acting on. What she was thinking, given her assumption, maybe she was right because she doesn't want to share her cookies. I mean, nobody can force anybody to share their cookies. Makes sense? But so if you don't have the right information, you will end up making wrong decisions. So the accounting as a primary, this thing provides information. And obviously, if we don't have good accounting and we don't provide quality information, then the people, the investors are going to make decisions that may not be optimal. Now that's kind of, a common sense thing, or we know that that is, but there's a bigger picture here. It is about your attitude. Now, the last time I showed you two things, right? One, I said, okay, here you have to understand things, not remember things, right? And second thing, I said, okay, you have to focus to learn stuff. Those two are necessary to learn the stuff, but besides learning accounting, the thing that will really make you tick in life and take you far is your attitude. It's not your aptitude. The altitude you reach in your life is not your aptitude, but your attitude. To have a positive attitude, to have an attitude which is, in general, good. I guess positive is the right word for that, but I'm also to be helpful to people and all kinds of stuff, those kind of things is what going to determine how far you go in life. The accounting, anybody can learn and you can learn. That's fine. I'm not saying that you should not learn your accounting. For example, how much you will get out of this class itself depends on your attitude towards this class. There are people who don't show up. You register for the class, you pay tuition. My salary doesn't go up or go down because you don't come to the class. I get paid the same amount. Now, it's your attitude. Whether you want to learn or you don't want to learn. Nobody can teach you if you are not willing to learn. And nobody has to teach you if you are willing to learn, because you will learn anyway. The bottom line is, the attitude that we carry around with us determines a lot more as to what will happen to us in life than anything else. So this video was about the three things that understanding, focus are fine, but above all, you need a positive attitude towards life. Yes, there will be good times, there will be bad times, times like this. You're not sure what's going to happen tomorrow, and a lot of people are in very bad shape. But you still have to keep a positive attitude. So that one is for that. Any questions? I think stop share here. Skip. Discussion question. How much time we have? 8 minutes. Okay, this is that's you're in class. Come on. Screen. Okay, take a look at this and next. So we'll prepare a financial report that compares. So this is your in class, and you can start working on it. How do you think we'll work on it? I'll kind of work along with you guys. Prepare a financial report that compares what Ashley and Jason each own and owe. So how should we prepare one? Well, first we want to figure out what is owned by each one of them, Ashley as well as Jason. Then what do they owe? So what is owned by Ashley? Let's talk about cash. How much cash Ashley has? Ashley argued that she is better off because she had a $1,000 cash in her bank account and a vintage car that she owes. Well, these are the stuff they own. How much cash Jason has? $6,000. Is that right? You guys can see this, is that right? Hello?
Yeah, we can see it.
Yeah. So we want to figure out what is owned by both Jason and Ashley. And one thing we know is they both own cash. And how much cash they own? Ashley owns $1,000. Jason owns $6,000. Do you have any confusion here? You all agree, is that right? Anybody doesn't agree? Raise your hand if you don't agree. Okay, so we all are fine on this one. Next, we want to look at what else they have. Well, Jason says he has a console which he bought for $350, but he could sell it for $280. Does Ashley has a console? No, she doesn't have one. So, okay, let's look at console. Ashley doesn't have one, so what should we put there? She doesn't play video games.
0.
0, yeah. I mean, if you don't have anything, I mean, what do you put? 0. What about Jason? How much do you want to put there?
2 something.
Look at this, what Jason is saying. He said he bought it for $350 and he said he could sell it for $280. The two numbers here we have, $350, $280. Which one should we put there?
$350, because that's what he acquired it at.
Who? Gaffarelli?
Yes.
Yeah, that's what he acquired it at, but we are trying to figure out what is their current worth, who is better off. That means at least we are looking at their kind of net worth. What they own minus what they owed gives you net worth. You know that, how the people who are rich have a high net worth, right? Or generally the rich people have a high net worth, but of course people can become rich by having a high income, right? Anyway, I mean, right now what we are looking at is net worth. And here 350, you can put 350 or 280. Now 280 is probably more relevant because that's what he can sell it for. He's not going to get 350 just because he paid 350 last time. Right now, if we convert everything that they have to cash, which is the best way to figure out somebody's net worth, and if he can sell it for 280, then we should put 280 there, right?
Is the 280 depreciation?
No, there is nothing called depreciation. That's the price at which he can sell it for.
But it's not the price, like it doesn't mean that the price has depreciated because he bought it and then now he can sell it for a lower price. Didn't the price depreciate?
The price has gone down. Depreciation is an accounting concept. We'll talk about depreciation later. So let's, for example, you bought something and you are going to sell it. You can sell it at a higher price or lower price, depends on what it is. And so, yes, the price has gone down. Right? And that is the relevant because that's what he's going to get, 280, not 350. So why are you putting 350 here? Because that is what he paid. That is the historical cost. The 280, he may be lying. How do we know it's 280? Just because he said, should we trust him? There are issues there. That is why, that is one of the reasons why there is a historical cost valuation, even though that is meaningless to a good extent, because actually the current market value or current valuation is more relevant for decision making. But auditors, they wanted to verify things easily. They can look at an invoice and say, tick it up. That's why most of the historical cost concept has been carried in accounting, financial accounting report. But now both the IFRS as well as GAAP are moving more and more towards replacement value or the current valuation. What is that you can sell it for now? What is the market value? It's called market value. But here, if we go by GAAP, generally accepted accounting principles, then we'll put at 350. So this is where you see how accounting kind of has a lot of judgments in it. It's not black and white. Even though we know that 280 is a better valuation, if that is correct, assuming that's correct, we don't know. But we are going to put 350 because we are going following the historical cost concept. So valuation is an issue in accounting. Whereas there is no valuation issue in cash. Cash is cash. We all know that. Let's go to the next one. What else they have? Somebody has a car, is that right? Ashley has a car. She said they bought it 800 because it's a classic car, vintage car, but now she can sell it for 1400. See, the value of this has gone up. Jason countered that Ashley still owed 250 on a car loan, and that Jason's dad promised to buy him a Porsche if he does really well in this accounting class. Jason's dad must be loaded, but Jason does not have the Porsche as of now. Now Jason owns 4,800 student loan. Ashley knows that Jason also owes a tuition installment of 800 for this term. So we can kind of put these things here. Now we can go a little quickly because I think we are hitting the deadline. Or you can, let me quickly go over it. So now go to the car where Ashley has car, we put it at 800 because again, we don't want to put 1500 because we don't know if that's correct. Though that is a more relevant value. Now, of course, Jason doesn't have one, so it's 0. Now in terms of what they owe, the car loan, Ashley has 250, Jason doesn't have a car loan because doesn't have a car, tuition payable, Ashley has paid her tuition, Jason has a tuition payable of 800 and a student loan of 4,800. So as we see here, if we see this thing, what is owned by what is owed, well, the net worth is the difference between the two. Ashley has 1,550, Jason has only 750. See these payables, the car loan and tuition payable and student loan, we don't have any confusion. We can, because this is the amount they have to pay to get rid of that or extinguish those loans. So these things also have no valuation problem. These are current liabilities. So current assets and current liabilities generally do not have a problem in terms of valuation, or very little they can have. But so there are several issues in accounting, which is called the valuation, disclosure, and even should we even capture it or not. I mean, so accounting has lots of judgment in it. And we'll talk about depreciation. Somebody said depreciation, but how do you calculate depreciation in accounting is different than the price of things depreciating. So here, who do you think is better off, Ashley or Jason? Obviously, it's Ashley, right? Now we can convert this to a balance sheet form: assets, what assets they have, what liability they have, and what is their stockholders' equity. So for a company, we'll call it assets, liabilities, and equity. For Ashley and Jason, so company's balance sheet is kind of company's net worth. But again, these numbers that goes into the balance sheet are, manufactured in many different ways. And that is why it does not give the true market value of the company. And that is why you have accounting issues that we have to talk about and learn more. How do we do it, and at least understand how these numbers come in. That the 350 is the historical cost concept. This should have been 280 if 280 is the correct number. Now, how do we get a valuation, current valuation? Well, things like console and all that, you can see what the price at eBay or somewhere. For a car, how do you get the value of a car, used car? Anybody? Blue book value, is that right? There's something called blue book value, Cali's blue book value. Similarly, you can get things appraised. So anyway, this is your in class. Any questions?
So do we have to turn this in? Or?
Yeah, this you have to turn it into the TA today. After we are done. Let me go back to, oops, what is it?
So for the council, we will be using 280 as a number, right? Not 350.
No, you should be using, if you use 280, then give your justification. You can use 280, but then you have to give your justification. You can give 350 and you say the historical cost concept. I mean, I just gave you one answer, but yeah, you can justify your answer. How do we go here? No, okay, stop share.
What was the assignment?
The assignment we just did. The Ashley and Jason's net worth. So I gave you the answer pretty much. But you have to write it up and send it to the TA or submit it. Any other question?
Wait, so we submit it on iLearn?
Yes, he should have given you a link.
On the assignments, right?
Yeah.
All right.
Okay, any other questions? Okay, I think we can end the meeting unless those who want to ask questions can stay back for office hours, if at all. If you guys, okay, people are leaving. I'm waiting. If anybody has a office, question, you can stay back and ask me questions.
Hi, Professor. Do we have discussion tomorrow?
Yeah, I think you have a discussion tomorrow. The TA will be there.
Okay.
Has he sent out an email? Has he sent out a link to you guys?
Not yet.
I don't think.
I think he will send out a link, because again, that discussion also will be in June.
Thank you.
Thanks. Any other question?
I had a question about the console. So we used the number.
You can use 350 or 280. You have to give your justification.
Okay, but in the example, we use 350 because we are not sure about whether 280 is correct. Is that the reason?
No,
why?
also I said, based on gap, I go with the historical cost principle. There are principles that you go by, but since they're working for net worth, that's another thing that you have to learn is that take a position and justify it. And I could take the other position and justify it. I said that is more relevant. That is more makes sense. 280. It's not what you paid. It is what you can get now. That determines your net worth. Now, of course, the caveat is I have to go with what words he has because I can't verify it.
Okay, thank you.
Okay, so those kind of things. I mean, in most of these things is about. So there are a lot of judgments involved in doing accounting. It's not black and white. That's all I'm trying to get at you guys for now. Anybody else has any other question?
For the assignments, the in-class one, where is the problem?
That's the problem. That one I did just now, the Ashley and Johnson. That's what I said. That's also the S1 in your book.
On the book?
Yeah, that is your also. I mean, this is from your book. In the textbook, I think it's called S1, chapter 1.
Oh, okay.
But your new book has numbers that are different than this one. So if you're following what I'm doing, I mean, you can just write down that and send it to the TA. I think that's one of your homework problems. If you look at it, it's one of your homework problems. Anybody else? Any other questions?
Are we going to discuss group project?
We didn't have time. We'll discuss it there, and the TA will send out. The group project is basically your SPA question at the end of the chapter. It's called the continuing question.
Mm-hmm.
So take a look at that. It's a SPA problem at the end of these things.
Okay.
End of your chapter called the continuing problem. Every chapter has it. Chapter 1 through 11 you'll do.
Okay. So when I get my book, should I just go towards the end of the chapter to see that problem?
Yes.
Okay.
And the TA will discuss with you guys also.
Okay.
I think we ran out of time. I mean, because of.
Besides studying, I guess, what do you think we should do for tonight after lecture for this class?
You have a homework due with the right next class.
Homework due?
Homework, yeah.
Okay, I'll check that out.
Next Tuesday. So I have to start working on the homework.
All right.
Yeah.
Where do I find homework problems or questions?
It's in your textbook.
On the textbook. Okay. Yeah. I'll be getting it later though, so I'll see it.
Or you can ask some of your friends who might have it. They can take photos and send it to you.
Okay. Sounds good.
I mean, these days, it takes a WhatsApp, one snap and a WhatsApp.
Yeah, true.
Yeah.
All right. Thank you, Professor.
Yeah. Thanks. So any of you guys, you have any questions? Zhongfeng or Hongyu? Do you guys have any question?
Excuse me, sir.
Okay.
Yeah, I just write the question down, and maybe it's overdue.
What is overdue?
Yeah, because the due is 8 o'clock.
No. I mean, it's not 8 o'clock. I mean, you can submit it.
Oh, okay. Okay, thank you.